Investing in the stock market can seem daunting for young adults who are already facing student debt and limited finances, but with the right approach, even a small investment can grow over time. The stock market often has a reputation as a mysterious and intimidating place, but with a better understanding of how it works, it can be a path to financial success. Don't let fear hold you back. The stock market may seem overwhelming, but it's not as scary as you think. Let's start with the beginning. The history of the stock market dates back to the 17th century with the establishment of the Dutch East India Company. The company was one of the first publicly traded companies and offered shares of stock to investors in exchange for financing for their trade expeditions to Asia. This was the beginning of the modern stock market as we know it today. Over time, stock markets evolved and expanded, becoming a crucial part of the global financial system. In the 19th and 20th centuries, stock markets became more regulated, and the rise of technology has made it easier for individuals to invest in the stock market. Today, the stock market is a vital component of the global economy, with billions of dollars traded daily. Now, you might be thinking, what even is a stock? A stock is a type of financial security that represents ownership in a company. When you buy stocks, you are essentially buying a small piece of the company and becoming an owner. This sometimes gives you certain rights, including voting rights for shareholders' meetings and the right to share in the profits if the company does well, sometimes called dividends. There are two main types, common and preferred. Common stocks represent ownership of the company and give you voting rights at shareholder meetings. Preferred stocks don't offer voting rights, but often come with higher dividends, a percentage of the profits paid to shareholders. When the value of the company increases, so does the value of your stock. Conversely, when the value of the company decreases, so do the values of your stocks. All this information is useful to understand, but probably the reason why you clicked on this video is to understand how the stock market works. So let's talk about that. The stock market is a platform that allows people to buy and sell stocks. There are two main types of stock markets, the primary stock market and the secondary market. The primary stock market is when companies first go public, selling their stocks directly to investors. These can happen through an initial public offering or IPO, or a direct public offering or DPO. Once the company has gone public, its stocks are then traded in the secondary market. This is where the public can buy and sell existing stocks from other investors. Treat the stock market like a giant auction house, with buyers and sellers constantly making bids and offers on different stocks. This in turn determines the fair price of the stock as it follows basic economy of supply and demand. When more people are buying a stock than selling it, the price goes up. When the opposite is true, the price goes down. This is more often than not driven by the underlying value of the company. If a company is performing well and constantly distributing dividends back to their shareholders, the share price tends to go up. Now, the next question you might have is where you can find these stocks if you want to trade or invest. Stock exchange is the answer. Stock exchange is a platform where buyers and sellers can trade stocks. Companies list their stocks on a particular exchange, making it easier for people to buy or sell them. The most famous stock exchange in the world are the New York Stock Exchange, or NYSE, and the Nasdaq. There are also regional exchanges such as Tokyo Stock Exchange, or TSE, in Japan, and the London Stock Exchange, or LSE, in the UK. Each stock exchange has its own set of rules and regulations which companies must adhere to in order to be listed on that particular market. In order to purchase the stocks, you do so via a broker. A broker is a financial intermediary who charges you a fee for their services. They are the ones responsible for executing your trades and making sure the securities which you have purchased are properly transferred to your account. Nowadays, there are a variety of online trading platforms that allow people to buy and sell stocks, such as eToro, Robinhood if you're in the US, or Trading 212 if you're in the UK. These services typically offer tools such as charting, research reports, copy trading, and other features to help you make informed decisions when investing in the stock market. Those are the basics of how the stock market works. However, that is just the tip of the iceberg. There are more complex areas of a stock market, such as principal listing and maintenance requirements, but we will leave that for another video. It is also important to note as an investor to understand the difference between long-term and short-term investments. The mindset is that long-term investments are those that require you to leave your money invested for a period of 5 years or more. This type of investment generally yields high returns, but also carries a higher level of risk as the value of your stocks can fluctuate significantly over time. Whereas short-term investments are the other way around. They require less time, has a lower risk level, but yields less returns. We have another video on how you, as a beginner, could start investing. You can check them out by clicking the top right button. One final thing to note to close the video. Buying stocks is relatively straightforward, but it's important to do your research beforehand. Start by looking at a company's financial statements, which can provide insight into how well the business is doing and what kind of returns the shareholders are getting. Researching the company's history, its management team, and understanding their business model is also essential for making an informed decision when investing in stocks. And that's it. That was a brief overview of how the stock market works. We hope you have learned something new today. And if you have any questions, feel free to leave it in the comment section below and we'll be sure to answer them. Thanks for watching. If you found this video useful, please share it with your friends. Give it a like, subscribe to the channel for more stuff like this, and leave a comment as to what video you would like me to do next. Bye bye.